Good afternoon. In this video, we're going to go over this past week's trades and a weekly recap. Before I get into the recap, if you're not in the room, find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, this past week, we had Monday off for Labor Day, so it was a short week, 4 days. I got, 13 wins and 1 loss for a win rate of 92.86%. So definitely a good week, even though it was a very, very challenging, tough, choppy week. But we'll get into that in a minute. So yeah, 13 wins and 1 loss. Definitely happy about that. Usually the short weeks, I kind of struggle with. I don't usually do well on short weeks. I don't know why it is. I just don't. So when I have a strong short week, it's definitely a big win in my book. So with that said, Tuesday, which is what, the 5th, SPY puts under 449.50, and where is the 5th? Right over here. Now we got like SPY up here, the 450 range. We got a lot of things going on in the world. I was looking at puts. Let's see, at what did I say? 449.50. Is that this low right here? No. Am I looking at the wrong day? Yeah, I'm looking at the wrong day. 449.50. I could have picked 449, but where was I? Where I put this? 9 o'clock. It was up here. So I use this low right here. And it was also previous days lower day too. So definitely like that. That was what I put out for trade ideas. Now, did I wait out the first half an hour this Monday? No, I did not. I waited for the first 10-minute candle to form. I always wait for the first 10-minute candle to form. I never take the first 10 minutes. I shouldn't say never. I think it's extremely rare that I do. It's maybe once in a great while, but I usually 90% of the time I wait the first 10-minute candle out. And if I'm struggling or if the market's very choppy, I will wait out the first half an hour. But I tell people in the room what I'm doing before I do it. So first 10-minute candle was red, so I took puts at new lower day. I was looking at the put side anyway, so I took the 4,500 puts at 750, and they went from 750 to 970 right there. So definitely pleased about that move. Then I took puts again at 1015, which is right here. You see 3 red candles, got a green candle right here, a nice little FU setup. It started to pop, and when it came back down, when it got below, I'm not quite sure if I grabbed it underneath 449.60 or if I grabbed it underneath this the wick. I probably grabbed it underneath the body because they're both lined up. You get the, let me blow this up a little more so you can see. You get the bottom of this candle right here, the wick lining up the body and the body. So to me, that looks like a good area to grab it right under 449.60. And I think I grabbed it down here because I grabbed it at 710 and they went from 710 to 780. Yeah, so yeah, because this one went from 750, got 750 to 970, so that was a good drop right there. But if I grabbed it up here, I got it at 710. It definitely would have went higher than 780. It would have gone to probably closer to $9 plus on that drop right there. So I think I grabbed it down here, but the real thing, I should have grabbed it right here. But it is what it is. It's always easy to look at things after the fact and say how easy it looks and stuff like that. So when you're trading in real time, you get to make fast decisions and calculated risks and stuff like that. So you just got to work with what you have. So me, I probably thought it was a fake out, and probably thinking it was easier to grab it down here when it broke below the 449.40 area. That's probably where I took it because I got them at 710 and they went from 710 to 780. So that's what I did right there. Then I took calls at 3 o'clock, which is over here. I can see why I grabbed it right here. Got this little area of flatlining at 451.75. Actually, no, right here, 451, 450.60. because you got higher day up here, tried to break higher day, which it did, we rejected it, came back up. So it's making an ascending triangle right here. It's flattening out right around this 450, 65 area, get rejected, and it came down. It didn't break lower day, it made a higher low. I probably should have grabbed it through VWAP, but I didn't. I waited up here, and I was thinking, okay, 3 o'clock, power hour, we're up to near higher day, we're probably going to end up pushing. And because it's making higher lows, it's definitely shaping up to be a bullish close. And it rejected, so I grabbed a 45.05 calls at 6:30, and it dropped, so I ended up dropping it at $2, so I got out. But then I switched to puts at 350, which is right here. Right when it broke below this 449.65, I could have probably grabbed it right here underneath the 449.75, but if it wasn't there, I definitely grabbed it right here at the 449.65 area. I got the 4,500 puts at $1.30. They went from $1.30 to 470 in that drop right there, so that ended up being a 200% plus play. So the end of the day play definitely was a nice play. I kind of was thinking that we were going to break out based off the setup. I mean, we've had this happen quite a bit lately in the past month or so. We'll have like an ascendant triangle and it'll look bullish, and it will just get slammed, and it just didn't work out. But you know, I would have probably taken it again, so that's a loss I took that I probably would have taken again. So it's not like I took a unnecessary risk. I mean, the setup was there, it just did not work out. So now on to September 6th, which is Wednesday. SPY puts on a 448, which is right here. This low, first 10-minute candle is red. I did not take puts right here. I don't know why I did not, but I'm glad I didn't, because I would have had it. It would have been a fake out. But look at this candle. This is what we've been seeing a lot of lately. You know, first 10-minute candle like this, and then this next candle. If you were to grab puts at new lower day right here, you would have got stopped out. And if you grab calls at higher day, you would have got stopped out. This is the worst candle to see after an open range candle, because this is the kind of candle that can get you trick you on both sides. And I don't know why I decided to wait out the first half an hour on this particular day. Was there news or something? I'll have to see. What was the date? The 6th. We had final services PMI at 9:45, and we had ISM services at 10 o'clock. So I think that I waited for the news to go, so that's why I did not take it. So thankfully, maybe we wouldn't have had this kind of a candle if the news didn't drop at 9:45. That could have been the reason why we've had this candle. But yeah, this candle is deadly, because it would have got you on both sides, especially if you're playing an open range breakout or breakdown scenario. This is one that would definitely caught you on both sides, and you could have taken 2 losses in literally 5 minutes. I don't like that, but it is what it is. I waited it out, and I did take my first play at 10:01, which is right here. Fake drop, fake pop. It came back down. Then when it broke below lower day, 447.45, I grabbed puts at 44.75 puts at 780, and they went from 780 to 1170 right there. So that ended up being a really, really nice play. Then the next play was puts at 1049, which is right here. No, 1049, right here. I didn't take this FU setup. I don't know why. I think I just didn't take it. I probably didn't trust it or something like that. I don't know. But the FU setup was right here. This was a picture perfect FU setup. You get a massive red candle, green candle, then another red candle. That was a perfect FU setup. Then we had another one right here. So I kind of took a chance on this one. FU setups work the best on the first time. The second time is the risk is 50-50, I would say at best. Maybe 60-40 if there's a lot of momentum, which there was this day. But A few setups are definitely like 95% on the first setup. So the second setup, much the the risk is higher and the success rate is definitely lower. But I did take it 44.60 puts at 530, and they went from 530 to 980 right here. So that ended up being a nice little drop right there. I probably could have taken this right here, but I didn't. I didn't do anything. I think that I had stuff to do. I think the wife had stuff on this day, but I didn't trade again until 317, which was right here. It's over VWAP. It pops down below. Then it comes quickly back over. I think I grabbed it when I went over 446 is where I think I grabbed it. The 44.60 calls at 590, and then went from 590 to 690. Now this is the thing that we've been seeing most of the week, Thursday and Friday. Everyone is trying to be a millionaire on one play. It's not going to happen. So get out of that mindset. Everyone's trying to hit home runs. Chances of you hitting a home run is very, very slim. Focus on base hits. That's all I can say. I stress it all the time. If you try to go for a home run, you're going to take so many losses that it's not worth it. If you went and took base hits, you take that 50 cents to $1 and you focus on that, that will add up a lot faster than it is to have 1 or 2 home runs. Because if you try to focus on a home run, you could lose 10 trades just trying to hold for that home run, and then it just doesn't become worth it. And instead of going for the base hits where you're going to get a 90% win rate over it, or 97 success rate over it, that you're going to do a lot better and they add up just as fast. In this particular market this week, this is what's been happening. Is that Thursday and Friday, if you didn't take the 50 cents to $1 move, you got crushed. You can't hold for big plays. It's just not the right mentality. Too many people are trying to get rich overnight, and it's never going to happen. Get out of that mindset. Too many people have unrealistic expectations. You're going to get crushed. I mean, trading is like any other profession. It takes time. You got to build yourself. You got to build your education. You need to have practice. You're not going to just jump in the market and start making a ton of money without putting in the effort. You got to put in the effort. You got to put in the work. You don't put in the work, you're not going to get anywhere. So trading is trial and error, just like any other profession. I mean, it's like you picking up a football and trying to go out there and be Tom Brady. You're not going to be Tom Brady. Professional athletes aren't going to be Tom Brady. But anyways, what I'm trying to say is that you're not going to pick up a basketball and be LeBron James. You're not going to pick up a football and be Tom Brady. You're not going to grab a hockey stick and be Wayne Gretzky. You're not going to. That's not going to happen. So you need the people that are great at their profession are people that work hard and just endlessly practicing and just never give up and always look to sharpen their edge. And that's what you're going to do with trading. So taking base hits is the best way to sharpen. It sharpens your edge. You get in and out. Because when you start holding, or you start hoping, I should say, that you have a good position and you're up $2 or $3, and news drops, or something random happens, or anything can happen at any given time, you could be, that $2 or $3 win you had is now zero, or red, or even that red, but more or less with daily expiration days, you can go to zero really, really quick. That's why they're high risk, but also high reward. But if you focus on the 50 cents to $1, you're getting in and out of trades. The longer you're in a trade, the more risk there is of something happening. News event, anything can happen. And that's why I'm a big believer in taking the base hits, get in and out. And a lot of people are like, well, you're leaving money on the table. Who cares if I'm leaving money on the table? I don't really care. I want to be in and out. I don't want to, get in a trade and then news drops or something where you have to go to the bathroom or something, and then you can't pay attention to the market. I mean, anything can happen. I mean, nature calls, news drops. I mean, people can be at your front door, or you could lose power. I mean, anything can happen when you're in a trade. So you got to look at it from the point of view that, if you get in a trade, take your base hit and get out in case something does happen. Because I mean, I've been in trades where things do happen and you turn a massive winner into a massive loser. So that's why I'm a big believer in hit it and quit it. So I don't like to hold and hope and try to get a huge monster win. Who cares? I mean, if you want to do that, that's fine. That's you. But I'm in this for the long haul. And to me, focus on the dollar or two plays or whatever the base hits and get out and just sit and wait for the next setup and do that and rinse and repeat. And this was the week that you had to do that, because if you didn't take the base hit, and this trade went from 590 to 690, if you didn't take that dollar, that was a loss. They'd have crushed you. And that was, I mean, yeah, even though it did pop up here more, this trade right here is red, even though it's up here, because of theta. Theta is the biggest enemy, especially late in the day. So I know I'm ranting a little bit and I'm kind of talking, but I'm just trying to give you guys that, be realistic. Don't be unrealistic. You see so many of these idiots online on Twitter posting their huge gains, but it's probably not even real gains. They probably photoshopped it or paper traded it, or if they did get that gain, they probably lost 10 other trades and they're just showboating that one trade they got right. So don't believe anybody on Twitter unless they show it all. With that said, I know I ranted a little bit, but moral story, base heads. Stop focusing on the big ones. Get in and out. Anything can happen. I've actually had a trade where I got in and I lost power. I mean, shit happens. It's crazy. Or you lose internet. That seems just as bad. And I hate trading mobile. I can't do it. My voice is cracking big time. Anyway, so Thursday, SPY calls of a 444.50, which is right right here. I picked this area because this was where support was, and it broke down from right there. So, and it broke down. First play was calls, waiting for the first 2-minute candle to form, which was green, a nice strong green candle. So when it broke higher day over 443.95, I grabbed calls. I grabbed the 44.50 calls at 650, and they went from 650 to 810. So we get a nice little play out of that. Stick to the base hits. You would have did fine right there. Then I took puts right when it came back down to low a day, right here. I didn't think I grabbed it at low a day. I think I grabbed it prematurely. I think I grabbed it right here underneath 443. Yeah, I think I grabbed it at 443. Because I had the 44.30 puts at 790. And they went from 790 to 870. So that wasn't even the dollar play, but you would have got the 50-cent play right there. You got to look at it from the point of view also the base hits. If you take the 50 cents or $1 and you have 10 contracts, that's $500 to $1,000 per day just on one play. The average person does not make $1,000 a day, not unless you're like a lawyer or something, but the average person does not make $1,000 a day. So just keep it simple, focus on timing, focus on being consistent, and the money will follow. So yeah, if you didn't take the base hit, you took a loss right there. I mean, yeah, it got lower there, but it was definitely theta. Took the loss on that. Then I took puts again at 1153, which was right. No, I didn't take it right there. 1153. Right here. Right there. I guess I could see why I took it here. Get the wick of this candle, the body, and the body. They're all lined up. I usually go for bodies, but if it's all lining up, like right here, I like look at the way it's lined up right here. I mean, I could have taken puts right here, but look at the bottom of this wick, the bottom of this wick, they all line up to the body of this candle. I like seeing that. Yeah, I mean, you could have gone the body. I mean, you could. I like when they all line up like this. Like right here, you have the bottom of this wick lining up with the body, and the body. So when I got underneath 444.25, I grabbed puts. I grabbed the 44.40 puts at 550, and they went from 550 to $6. They didn't really go far. They bounced off VWAP, but take the base hit, get in and out, take the 50 cents. So that ended up working out. But if you didn't take the base hit, that would have been a loss. This day was a lot of that. If you didn't take the 50 cents, it was going to crush you. I mean, you could have bought the breakout right here, and it probably wouldn't have been much. Theta was really ramping up this day. It looked like you would have had a good play, but you just weren't getting much. Theta was just going into overtime. So we got puts right here. Then I took calls at 256, which is right here. Right here. 256. When did I get them? I think I got them over 445. Yeah, I did. And that's another thing I like to do, is I talk about it all the time in all the recaps. If I'm looking at an area to break, I will buy it right before the break. Now, if I think in the room I said I was taking it out for 445, I took the 44.50 calls at 520, and they went from 520 to 610. See, another base hit. If you didn't take the base hit, you would have taken another loss. So you had 1, 2, 3 base hits, and if you took those 3 trades and you didn't take the base hits, they would have been losses. I mean, this doesn't usually happen like this. So you don't usually get these kind of days where you got to be really dead on with the timing and the base hits. But this was just an unusual Thursday and Friday that but I recognized it quickly. You got to take them and get in and out. But anyways, getting back to what I was saying, that if I put a level at, if I'm going to take calls over 445, I will take them right before. I'll take them at like 44.95. The reason I do that is that if you get to an area like right here at this 445 area, you get the body, you get all these these candles lining up. If it does break with volume and with conviction, I should say, this is going to be a strong move. And if you buy right at the break, you could get a terrible fill. I mean, the SPX could, the spread, which is usually right around 10 cents, 20 cents at max spread, and if it pops, you could see massive spreads. And if you buy right before it breaks, you get a good fill, and you get in before the volatility pops, and then you can get a nice play. But if you wait for it to break, you're going to get filled probably terribly. You're going to be chasing the move, and if it's a fake out, then you pretty much bought probably the high of the fake out, and you're going to end up taking a loss. So this is the way I prefer to do things. You don't have to do it. That's up to you. Me, I personally like to buy right before the break. I like to anticipate the break and get in before volatility pops and it breaks out. And I also assume that every breakout is a fake out. Because if it does break out and you take the base hit, you're gonna be in and out even if it's a fake out. Like right here, it popped, new high a day, and look what it was a fake out. So right here, it popped, high a day, it was a fake out. So if you get that mentality of getting in right before the break, anticipating the break, and you take the base hit, it's anticipating it could possibly be a fake out. I mean, yeah, this thing could rage and you could miss a $5 move, but if you grab it and play with the mentality that you're going to get a $5 move, you're not going to get it. But if you go with the base hit and anticipate of it breaking out, anticipate it being a fake out, and you take the $1 or $2 move and get out, you're going to do good, even if it is a fake out, because you have that mindset versus people that will buy the breakout and expecting it to go to 447, 448 or whatever. But it didn't happen this day. And sometimes it does happen, but you just don't know which moves are going to be the monster moves, which moves are going to be the monster breakouts and breakdowns. And so you just get to kind of have the mentality that everything is going to be a fake out. And I look at it like that. I think a lot differently than a lot of people, because I've been doing this for a long time and I've seen just about everything. So I prefer to have that mindset than expect a massive move and to get a $10 move. Because if you're trying to hope for a massive breakout and for a $10 move, the chances of it happening to you or getting it right is going to be very, very slim. So it is what it is. You just got to change your mindset. because this market will shit on you, literally. So that was Thursday. Now Friday. Friday I took a chance. Now let's see. Friday trade ideas room calls over 440, 445.50, which is right up right here. I didn't grab this high. Yeah, this high is right here. This, but it's not at a level. To me, pre-market, I like to round to the nearest 50 cents or whole dollar, so I averaged up. And this, I could have said 446 on the R from this, but you know, I just said 45, 445.50. So I was happy with that. First 10-minute candle, green. I bought calls at 941, the 44.70 calls at 610. I think I might have, yeah, I bought it. Let's see. Yeah, I bought it here. Faked out, came back up, then it ripped, and I was able to get out here. So, did I get out there? Let me see. 940. No, I got out instantly. So yeah, I must have bought it closer to right here, right underneath 446, because I had it the 44.70 calls at 610, and they went to 660. So they got literally 50 cents right off that, and if it was a fake out. And I didn't take calls right here. I mean, obviously I didn't take calls. I mean, I didn't take this FU setup because, was there news dropping this day? There's a reason why I avoided it. No, there was inventories at 10, but no, there wasn't news. So for some reason, something that, I don't remember what it was. I don't know. I can't. Anyways, we got the calls right here. Then it pulled back. I was put the call ratio high. There was something. Oh, it was VIX. Was it VIX? Was it VIX? Let me unlink this. Drop it down to 10 minutes. I think VIX was low. There was something that wouldn't that I. Yeah, no, VIX was. No, VIX wasn't that low. Well, it was under 13. No. What time was this? 9:50. Yeah, VIX was under 14. I guess I could have been a little more nervous about the VIX, but anyways, I got if you didn't take the 50 cents right here, you would have taken a loss. I mean, yeah, you would have. I don't think you would have taken a loss, but you could have stopped out here, but you would have actually been a good. If you held that, would have been a good play. But you don't know that's going to happen. It's easy to look at, like I said, after the fact, but. You get the red candle right here, the FU setup right here, nice FU setup. I didn't take it. For some reason, I just did not take it. Another reason it being was a rejected pre-market high, so I didn't feel too comfortable with that. So the FU setup did play out. I did see some people in the room that said that did take it, and that worked out for them. Good for them. Then you get it retraced back down to pre-market high. And then it popped. You get inside candle right here. I wasn't going to touch it. Wasn't going to touch it. I didn't want to take puts here. It pulled back. I did take calls right at 11:33, which was right here. I took it up here. I remember this because it pulled back down to the 20 EMA. I got bought up, came back up to higher day over 440. Well, not higher day, but over this body, because you get the body and body here lined up. It's right over this wick, so I liked it right over this 446.90 or 85 area. So this is where I grabbed the 44.70 calls at 690. Then it dropped. Then I bought it at 12:01. I bought it right here off from the 20 EMA. It's been back several months ago. We used to buy off from the 20 EMA. If it was above the 20 EMA and it came back and tested it, we were most likely to buy the dip off the 20 EMA. The EMAs used to be good support and resistance levels. We used to go and jump in on puts if it was below it and rejecting the moving average. We haven't seen that in a while, so it coming back and doing this again a lot lately is definitely good to see, and that's why I bought calls right here. I added to my position. I added more at 340, making my new average 515, and they went from 515 to 6. So I was able to get out. Had a nice recovery on that. I just took the chance that it was going to hold this 446 area, hold the 20 EMA. You got support right here, 20 EMAs right here. So I looked at it from the point of view we get a strong possibility that it was going to bounce here, and it did. So it ended up being a good average down. A lot of people bought just where a lot of people like to just focus on where I average down. For some reason, my average downs have been like really, really, really good. There was one point in time where my average downs just weren't working, but but 90% of the time they work really well. They end up being better than the play itself. So yeah, some people just jumped in right here when I averaged down, and they had a nice good play on that. But yeah, I was able to get out green. So yeah, that worked out pretty good. Then it didn't really it made lower highs right here. I didn't buy puts right here. I probably should have. I just didn't think it was gonna break. So I didn't really do anything. I didn't look at this mess. Just chopped and chopped and chopped. But I took calls over 201, which is right here. And I see why I did it. You get the body, 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 body. You got all this lining up right here. I love seeing this. This makes a good, usually makes a good move. And it ended up being a fake out. But because I focused on the 50 cents, I got the 44.65 calls of $4. And they went from $4 to $4.50, so literally 50 cents. And when you have markets like this where you're struggling to get the 50 cents to $1, not just because it's not moving that much, but also theta, as soon as you get in, put in the sell order, put it in immediately. And everyone's like, how are you getting filled? How are you getting filled? Because I'm putting in the sell order as soon as I get in. Because if it's one of those moves where it just pops up really quickly and retraces, you're not going to get a sell order in no matter how fast you are unless you do it right after you get in. And this week, I've been doing that a lot lately, especially Thursday and Friday. You just get in and out because you don't know. Then it ended up dropping. I didn't take puts. But after this play, after this fake out, I had enough. This Thursday and Friday was just nothing but chop. If you didn't get the perfect entry, you weren't getting the move. And there was just too much risk. I didn't like it. So I know I rambled a lot about this video, but I actually put in a lot of, good things to think about. You need to change your mentality, adjust to the market. Over the years, if you've been in the room for at least a year plus, I've had to change so many things. The market conditions change so much. And this was reminding me of the days back several months ago where if the market was consolidating under VWAP, it was going to rip right through it. And if it was consolidating over VWAP, it was going to flush through it. We had plenty of times where it was doing that. Then we had times where VWAP wouldn't even act as resistance or support. It would just roar right through it like it was nothing. And it did the same thing with the moving averages where there would be support and resistance. Then they'd just start ripping through it. So the market is always changing, so you need to evolve with it or get crushed. So that's going to do it for the recap. I know I rambled a lot. We went over a lot of random stuff, but this is, an edited version of me just rambling, spitting out my ideas and facts. So I hope that you guys will take it to heart and adjust accordingly. So thanks for watching.